were, what kind you got, because I'm trying to try them all personally. So when you get by Cusa Cupcake, located at 2008 West 81st in Maryville, Indiana, let me know how good those cupcakes were. All right, so let's get back to the question of the day, which again is from Brian from New York. Thank you for contacting me. And you also can email me with your questions, 800 creditscoreman at gmail.com. So since we're talking about financing vehicles, and this is exactly why I picked this particular question for this show, Brian asked this simple question: should you refinance your car? That is a very good question. It's come up with a few of my clients. They want to refinance their car because they think their payment is too much and what have you, and they need to get some relief, if you will. So here's what I said to Brian. In my opinion, now this is just my opinion, and after running some numbers and looking at the scenario financially, it's not necessarily the best move to make. When you refinance your car, let's say you have a 5-year term. You're 2 years in, you think your car payment is way too much. If you refinance it, it'll drop your payment, $50, $100 or whatever it is, and when you refinance your car. So what you do is you extend the time that you've been paying for the car. So if you refinance it for an additional 5 years, when you're finished paying on that car, it's been 7 years. God forbid you didn't buy a new car. Let's say your car was already 3 years old, and then now you're financed it, and now you're refinancing it, adding 7 years to that. So now at the end, when you're done paying for this car, the car is 10 years old. When the car is 10 years old, it's literally worth nothing. I mean, if you have a regular car, and regular to me, if you got like a Chevy Malibu, you have a Cruze, you got a Ford Fusion or whatever, if you have a regular car at the end of 10 years, it's not necessarily worth anything at all. So then you're paying for something that isn't worth much at all. And at the end of 10 years, oftentimes your warranty's done, and you have issues with your car, especially if you're not a person that goes in and gets your oil changed every 3,000, 5,000 miles or whatever it is. So to me, I think that refinancing your car is not the best move. Now, everything is personal to you. This is personal finance that we're talking about. So sometimes that is the best move for you if it's financially feasible for you. If you absolutely need some relief, and that's going to give you the relief that's going to allow you to do other things, to actually pay other bills, for you not to ruin your credit. If that's the case, then maybe you want to go ahead and refinance your vehicle. But financially speaking, it's definitely not the best move to make. You may be better served by go ahead and trading in your car. Even if you're going to be upside down, you may be better off by trading your car. So that's what I wanted to make sure that you knew today about this particular question: should you refinance your car? And it's very smart for you to go ahead and look at the entire scenario. Look at everything. How much is it going to cost you in interest and all of those things? Is your interest rate going to go down? Is your payment going to go down? And then what kind of term you're looking at? You may not necessarily have to refinance for 5 years. Maybe you can do it in 3 years and still get that kind of relief, but make sure that you look at all of the options in there for sure. Now, like when I said about you being more than likely to be upside down when you go ahead and trade when you go ahead with your car, make sure that you know what that amount is and how much it will be if you're going to trade your car as well, because it's going to add to your new payment as well. So make sure you know those things. And sometimes a bank won't finance you either if your car isn't worth what you're refinancing for. So you all know when you drive off the lot, your car is not going to be worth whatever it is you pay for most of the time. So make sure that that's also good for you as well. Because if you're upside down in that regard, the bank may say, you owe $10,000. This car is only worth $8,000. We can only refinance you for $8,000. What are you supposed to do for that $2,000? If you're doing this refinance to give yourself some give yourself some breathing space. Maybe you don't have an additional $2,000 to do so, which may be a good reason for you to go ahead and trade that vehicle. So again, thank you very much, Brian. I appreciate you contacting me. We had a good back and forth in regard on Facebook. So thank you so much, Brian. You are officially a part of the 800 Credit Score Man Show family, and you too can be a part of the 800 Credit Score Man Show family by sending me your questions. I would answer them directly to you, and I may use your question on the show to be the question of the day. So again, the question of the day is brought to you by Cutest of Cupcake, Cupcakery and Bake Shop, located at 2008 West 81st in Maryville, Indiana, where the cupcakes are more than just cute, they're delicious. All right, so let's get back into this whole car thing. So I said I wanted to tell you guys a story. So let me tell you this story about a lady that I know that wanted to lease a vehicle, since we were talking about leases at the beginning. So this lady wanted to lease a vehicle. We talked about it prior to. She said, hey, I would like to lease a vehicle. What do you think? Here's what my credit score is. Do you think that, I might be approved? All of those things. So we had this conversation. And so she went to the dealership. And for whatever reason, the option wasn't the best for her. So it just wasn't going to work out. So in my mind, here's how the scene went. She's sitting there with the salesman, Brian, and she says to Brian, while sitting at his desk, hold on, let me call my credit guy. So she called me, and she gave me the rundown, all the particulars of what was going on, and she asked my opinion. So I suggested to her that she contact her bank about the auto loan the next day, because it was later in the evening. So contact your bank. So her credit score was pretty good. Of course, she could be financed absolutely for this vehicle, whether it was a lease or a purchase. She could do that. So what the dealership did, and one of their nice tricks, was to say, here are the keys. Take the car home with you, see if you like it, drive it overnight, come back tomorrow, we finish the deal. So they let her take the car away. She drove that car the next day to her bank. She went in the bank, they pulled her credit report, they said, hey, of course, we will approve you. You got a good credit score. It's actually higher than what the dealership told you what your credit score is. And so, yes, absolutely, you can buy a car. How much money do you want? So she was like, oh, I can buy this car? And they were like, yeah, absolutely. How much money do you want? She told them how much that this particular car was, and they actually gave her a blank check for an amount that would be higher. She's like, here's your blank check. You can write the check for how much ever you want. Go pick you out a car. Send us the information. We'll make sure the car is worth the amount and all that stuff. But here is your check. Take it to the dealership and drive off with your new car. So that kind of thing can happen to you if you have a good credit score. That gives you a massive amount of leverage when you walk into the car dealership, and you already know what I'm going to say is you already know your worth. You know your worth. You know what you can get. You know what kind of interest rate you can get. That can happen to you as well. So this lady was able to go to the bank, get that check, take that check to the dealership and say, I want a car. This is the car I want. And she was able to do so. And she was smart about it. So even though the bank gave her a blank check and said, hey, you can write this for whatever amount you want to, she didn't do that. She was smart enough to say, okay, I don't need all that. I'm looking at my finances. Just because they give it to you doesn't mean that you need to take it. So she was able to get the car that she wanted. She got it at the price that she wanted, and everybody was happy. She was able to drive off that dealership in her brand new shiny car. So that's what happens to you when you have a good credit score. And this person didn't think that their credit score was that good, but it absolutely was. And that brings me to another point. Just because because you've been listening to the 800 Credit Score Man show, that a 750 and above is excellent when it comes to getting the best interest rates and all of those things. And between, a 600 and a 650, you're a little below 650 to 7. You know all that stuff because you've been listening to the 800 Credit Score Man show. So you know all of that. But auto dealerships, and when it comes to autos, the parameters may be different. Those numbers may be different. Some places, if you have a 720, you're considered excellent, especially when it comes to cars. In some places, you're considered good credit if you've got a 680. You're in the good category and you can pretty much get what you want. You won't get the absolute best interest rate, but you can absolutely get whatever car that you want. So in some places you're there. So don't be held to the whole 750 thing, and nobody's going to tell you this. I happen to have some inside information with a person that works at Toyota, and they showed me the information saying, hey, here's our tiers. So anybody comes in this place and they have a 680, they're a good customer for us, because there's so many people coming here under a 680 that a 680 and above, we're absolutely getting them approved. So don't be dismayed by your credit score and you're looking at it, you're like, man, I got a 650 and I'm not going to be able to be approved, or I got a 630 and I'm not going to be able to be approved. That's not necessarily the case. So sometimes you got to cast that net out there and see what's out there. My brother-in-law, James Stinson, taught me that a long time ago. Cast that net out there and see what's out there. So look, I want to go ahead. I want to give a couple more shout outs, and I'm going to end the show for you guys and give you some additional information and that offer that I was telling you about that you cannot refuse. So I want to give a happy birthday shout out to Eugene Dooley. He celebrated a birthday earlier this week. I want to give a shout out to Wallace Bryant. Wallace Bryant is the only 7-footer that I actually know personally. So happy birthday to you, big man. I want to give a happy birthday shout out to Elgin Reese, Wayne Hilson, and I got to give a happy birthday shout out to Rodney Harris as well. All right, so look, you guys, let's talk about this. I wanted to make sure that I mentioned the whole negotiating process when it comes to buying your car and about the loan and the time frame. To lower your payment, of course, you can extend the life of your loan. So you can go buy a car and put it on 36 months if you want. You're going to have a higher payment. If you put that same car, that same amount on 60 months, which is 5 years, then you're going to have a lower payment. Nowadays, they're financing cars at 6 years and at 7 years as well, lowering your payment, but you're going to pay for the car longer. You're going to pay more money for that car. The longer that you finance it, you'll pay more money for that car. Now, here's a caveat in that. If you walk in and you get a 0 or 1% interest rate and it's over 72 months, you're not going to pay more for that car. But what you will be is more upside down. Now, I mentioned upside down in the question of the day. Let me explain upside down for you guys that don't know. You're upside down when you drive off the lot, or if you, let's say you not necessarily drive off the lot, but absolutely when you drive off the lot with a brand new car. They say it's not as worth as much money as you just paid for it. Soon as you drive off the lot, you put 2 miles on it and it's worth less money. So you're upside down when the car is, you owe more on the car than it's actually worth, what you can actually get for the car. And that's whether you're trading it in or you're selling it to an individual person, then that means you're upside down. So if you're upside down and you go to trade your car, say you owe $10,000 on this vehicle still, you want to trade the car in, you owe $10,000, you go to the dealership says your car is worth $7,500. We'll give you $7,500 for you. What happens to that $2,500 that's left over? Here's what happens. You buy another car, right? You're at the dealership to trade in. You buy another car. This car happens to be $20,000. You negotiated. It was actually $24,000. You're a great negotiator. You got $4,000 off. And so now that vehicle is $20,000. You still owe $2,500 for the previous car because they're only going to give you $7,500 for it, and you owe $10,000 on it. So now your loan amount is the $20,000 plus $2,500. So $22,500 is what your new loan amount is going to be set on. So when you're looking at your vehicle and you're going in, that's how it works when it comes to lowering your payment. Now, I was talking about extending that term and going out to 72 months, and you're going to get a lower payment when you do that. A lower payment is great. Of course, we want to pay less money, but if at the end of the day, when that 72 months is over, your car isn't worth anything, you may need to rethink financing something for so long. Now, if you're in a bind and this is what you have to do, I say you do it. But if you have the option to lowering your term, then you absolutely want to do that. You want to lower your term. Not only when you finish paying it off at 72 months, it's going to be older, so it's not going to be worth as much. There's more wear and tear on the vehicle. There's more miles on the vehicle, and even your warranty may be voided after that particular point in time. So you want to make sure that you know what you want to do in that regard when you go in to finance for 72 months. And don't go in with the idea 72 months and then I'll refinance it. We already talked about that. It's not necessarily the best option for you to go ahead and refinance that vehicle as well. Also, I want to give